Hello and good morning. This is Benaya. This is the Trend Volume podcast given to you by Trend Volume and me, myself and I. So I hope everybody is well on this beautiful weekend. It is the 7th of October. It's the first weekend of October, baby. We've got literally, 25% left of the calendar year. So I'm going to hit you with some facts today, right? And we're going to go straight into it. I needn't keep you too long. We are going to be demystifying Bitcoin price action delivery. We're going to be weighing up the Libra scale of importance, weighing out the pros and the cons. We are going to look at the general market sentiment outside of the magic internet money. And then we're going to piece it together, round it off, fly the bird to a landing. And then you can have a good weekend, right? Touch some grass, spend time with your family, and get educated, exercise. It's what it's all about, right? It's what it's all about. This money thing is simply a byproduct of the Marxist construct. So what we're here to do is play the game, not be a victim of the game. So with that said, I do want to start off with a fun fact for you today. So a fun fact is this. Did you know the first bank holiday was created by the United Kingdom in 1871? Interesting, right? An extension to this would be this. It was called Boxing Day. It was originally a day off for bank employees to count the money they had collected in the previous year. So just an interesting fact there. The reason I bring it up is because on Friday, the Chinese people had a bank holiday. Canada, the US, and Japan have a bank holiday this forthcoming Monday, being the 9th of October. So what does that mean for the markets in general? Well, it means an absence of liquidity. So I do not expect the markets ejaculating by much or going down by much until Tuesday. Now, with that said, the IMF are linking up next week, every single day of that week. For those that do not know, the IMF is the International Monetary Fund, and it's as simple as that, really. Okay, so what does this mean? It means a lot of volatility. Now, volatility is not direction implied. What is direction implied is the trend, the volume, and the momentum. So without further ado, we are going to segue directly into Bitcoin and discuss the above. So looking at a macro time frame, we'll start this off with the macro, then go into the micro, then massage it into the intraday if we've got time. So I appreciate your time. Thanks for attending this podcast. Without further ado, let's jump into the minutiae. So looking at the monthly, what can we see here? Well, this is a logarithmic chart going right back to Genesis all the way to 2009. So what we're going to do here is set this to a regular chart, and then we're going to dive straight in and zoom in on price action delivery, and we're going to see exactly what the monthly is alluding to. So as always, we'll be looking at the Bitcoin USD index. We'll be looking at the trend volume pro version 2 indicator, as well as the trend volume inflection indicator. Now, the reason being is because this helps us read trend, volume, and momentum. It simply helps us read it. It takes up all the complexity, puts it in a blender, pours it out in a NutriBullet smoothie, if you like, and makes it digestible for us to consume. Okay, makes sense? Hope it does. So let's jump into it. So looking at the monthly, what do we see? We do see positive buy pressure to the tune of 63% versus 36% sell pressure. That will be changing over the course of 24 days and 15 hours until November. So anything can happen. The volume is most likely to change. That's the first thing. The second thing, what you will find is this chart here is something I've been sharing quite a lot this week, all over social media and in the private communities, as well as on the podcast. And if you have not seen this already, I'm going to spoon feed the nuance really quickly. So ultimately, the yellow area is where we are calling resistance. Why? Because there's two main factors. The first main factor is we are underneath the 21-day look-back period. We are taking it on right now as we're currently recording this, but we've not expired above just yet, and the expiry on the body is all important. We could always wick there for liquidity, but if we're not closing bodies above, it's that's the story, right? I mean, a wise man said this. A lot of you know the wise man. The wise man's called ICT. He has said the wicks do the damage and the bodies tell the story. So wicks will do damage above for sure. I suspect that. But as long as we've, not having a body closure, that would govern my bias here, right? Bodies tell the story. Wicks do the damage. So we're here to trade candle bodies, not the wicks, okay? We'll leave the wicks for Tom, Dick, and Harry. We trade the bodies, okay? Keeping it simple with you. So again, as long as we've got bodies underneath $28,182, risk is still to the downside, okay, despite the little ejaculation we've had over the last couple of days. Cool. So that's the first thing. We are taking on the 21-day look back period, but failing to close above as of current time of recording. An extension to this would be this. The second piece of vital information is the worst candlestick we've had on the monthly was August. Okay, keeping it very simple. The worst monthly candle was in August. So what does that mean? We had a sell side imbalance and a buy side inefficiency delivered in August. So at the moment, we are underneath consequent encouragement of that. So a bit of gobbledygook for those that are not au fait with the language. So I'm going to dumb down the jargon. What this means is this. The middle ground of the imbalance of August is known as consequent encouragement, which is marking out at $28,182. So it's simply the 50% level of the imbalance of liquidity delivered on August. Particularly between July and September. Okay, we're taking the low of July, the high of September, and measuring the imbalance that was given to us in August. So the middle ground is consequent encouragement. All you need to know is that if price action's above 28.1, that would be bullish. However, as long as we are below, which we are below, that would be bearish. Okay, risk would be to the downside, particularly over the next 24 days and 15 hours. So just keeping it very simple, very to the point. If we close above 28.1, we can then derive targets back towards the current yearly high back in July. However, as long as we're underneath, which again we are, I would be expecting targets below back towards 20 Gs over a period of time. Okay, so just to give you some sort of texture on this, we're looking at a max upside of approximately 24% and a max downside of approximately 28%. So, 7,800 to the downside and approximately 6,900 to the upside if it wanted to get spicy, if being the predicate. So let's jump into another time fractal. We're going to jump into a weekly. In fact, no. Let's do monthly momentum first, then we'll go into a weekly, because then I think that's respecting everything here. So what we need to look at here on monthly momentum is this. It's bullish, right? One thing about me is this, guys and dolls. I will always try my best to be real with you, uncut, unedited. And with that said, I will try my utmost best to represent both sides of the coin, okay? So I'm going to be looking at the bullish scenario, the bullish case, what's good in the hood, and also what's the reality, what's the realist talk, what's the stark truth. So we'll measure both sides of the coin realistically so you can manage your expectations. So looking at the momentum, it's absolutely bullish. Yes, it is. We've got stochastic momentum geared up above 21,700 on stochastics. We've got MACD geared towards the upside at $26,300. And we've also got the RSI that's geared towards the upside above $26,969. So how do we synthesize this? Well, momentum is biblically to the upside on a monthly. However, you've got to respect this, all right? The monthly's only 7 days in, okay? So respectfully, it can change in a heartbeat. We do have 24 days and 15 hours for this to unravel. Now, with that said, what we do see is the stochastic momentum touching the 60 level. Now, historically, the stochastics on a monthly basis do retreat at around 60, okay? So just to go around this a little bit more, if I turn your attention back to November 2019, this was the exact region where we had a pullback, right? So going back to November 2019, we've got the same signature that we do now on the stochastics. And need I remind you what happened in 2019, okay? So November 2019 was literally here. Price action was $9,500. We then went to the downside. And I'm going to remind you guys, okay, I'm going to remind you on this. The market did not stop falling until March 2020. So we had the signal given to us on a monthly back in November 2019. That then led to the great pandemic in March 2020, right? So we had the sell signal a year in advance, right? Are you with me? The best part of a year in advance. The candlesticks do not lie. They're tattooed on the chart. Now look, I'm not trying to get giddy and frisky, because I lost my father to COVID and my grandfather to COVID-19. So I'm not telling you I predicted COVID. That would be very stupid. But what I'm telling you here is that numbers do not lie. 1 + 1 is always 2. We knew the chart would fall in November of 2019 on a monthly basis. We saw continuation until March 2020, and then the market rebounded to biblical proportions. As you see here, it melted to the upside and never come back. Right, never come back. Right, orders of magnitude went from 3,000 all the way to 60,000. Right, melted faces in real time. So what I'm here to do is simply show you the data so you can make your minds up for yourselves. Okay, I'm not a financial advisor. It's not financial advice. I'm simply doing my journal. So again, we've got exactly the same signature this time, right? So exactly the same thing we saw happen in 2019, we are seeing happen right here, right now. Does that mean we're going to drop? Maybe. Maybe it does, right? Maybe it does. If we're looking at the political backdrop at the moment with market sentiment around the earth, you know, Israel, Russia, Ukraine, it's not a bull market, dude. You look outside your window, this is not a bull market. One could short anything right now and probably make some money, right? You could short the S&P, make some money. You could short gold, make some money. You could short Bitcoin, make some money. The emphasis is on the short, meaning you've got to be selling these underlying instruments. They're all bearish instruments to be played to the downside, okay? I'm hyperbolizing my stance here, right? Or you could be long cash. You could just come out the markets and be long cash. Simple. Or a step further is this. You could be long catastrophe bonds. They call it T bonds or C bonds. I forget the terminology. But basically, you could be betting on a debacle. And as the debacle unfolds, you'll be quids up. Right? This is how you hedge your deltas in any political regime, in any monetary regime. Whether it's quantitative easing or quantitative tightening, you survive by following the trend and the volume. And I put my life on that. You know, I put my company title on that. Trendvolume.com. There's no facade around here. Monday to Friday, we're on the podcast completely free doing this delivery, even on Saturday to Sunday now. So you got me every single day of the week telling you the game plan completely for free, completely accountable, putting my dreadlocks on the guillotine. So you know we put our money where our mouth is, and we put our data where our mouth is. It's no jiggery pokery. It's not no random luck. Oh, lucky. Oh, I got lucky. Haha. No, fuck that. We work hard for this. We study this. We measure this methodically, religiously, Monday to Sunday. This is not a scratch card for man. This is not a lottery ticket for man. This is how we get sovereign in any political regime. And Jano, who God bless, no man curse. And His Imperial Majesty is with me in everything that I do. So I don't answer to the whim of a human being, right? Oh, he's too opinionated. I don't care. How about that one? I'm not going to go too deep into a lecture here. It's not the right time, but, you know, just be careful where you get your advice from. Be careful where you get your counsel from. Often they should be different places, and success leaves clues. We do not work harder for longer for the same fiat true barter that they are debasing at a biblical pace. The US debt clock is at 33 trillion and counting. How do they service the debt? By debasing the currency. Who suffers? The hard savers, the hard workers that have been toiling and grafting for decades. They're getting robbed by inflation. Why? Because, you know, financial IQ. Simple as that. They're working harder for longer and not putting their money to work properly. And that's the way the system's designed, dude. It's the way it's designed. We live in the Babylonian system. It's just 2023, dude. Now we've got tech. How about that? It's the biggest salvation. But you've got to utilize it. You've got to utilize it, right? We've got AI now. You've got to utilize it. Before, you had to pay for top tier education, right? Now you go on ChatGPT or Google Bard and you can get the same level of alpha without forking thousands. The world is changing in real time. Labor is changing in real time. You've got robots doing human jobs in warehouses. Why? Because it's more efficient. They don't take cigarette breaks. They don't have fag breaks. They don't have toilet breaks. They do not procrastinate. They are programmed to do a job and they do the job. Much like my algorithms, right? My indicators, they are programmed to do a job and they do the job. They don't get high on the weekend. They don't have feelings. It's formula over feelings. And I stick on it. So cool, leave it there. How are we doing for time? 15 minutes, not too bad, baby. So yeah, monthly in summary, as long as we're underneath 28.1, my risk would still be to the downside on this asset class, largely speaking, the whole crypto space. And I think we should quickly go into that. The whole crypto space right now is worth $1.07 trillion. So when people say, oh, Bitcoin is a fad, cryptocurrency is a fad does not accrue to $1.07 trillion of fiscal firepower. That's not a fad, right? Some expensive fad, right? But I mean, look, I still think the market cap's going down. I still think we'll be going underneath $1 trillion. I still see dissipation and money leaving the market in billions. The North remembers when we was at $69,000, the total market cap was $3 trillion. So in essence, we've lost $1 trillion a year on average since 2021. Since 2021, the ecosystem has dissipated $1 trillion on average per year. Not an opinion, we measure this. It's my fiduciary purpose to measure this. Anyways, leave it there. Don't want to get too animated. But cool. You know, be careful where you get your advice from, guys and dolls. It's a serious topic. So cool. Monthly, again, bad underneath 28.1. Let's segue into a weekly. Then we'll go into a daily. Then we'll go into a 4-hour. And then we'll look at what the adolescent timeframes are alluding to on this kaleidoscope. Right, because it is a kaleidoscope. You can't look at one time fractal and think you know what's going on out here. It doesn't work like that. You have to look at a monthly to know what the quarterly's doing. You have to look at the weekly to know what the monthly's doing. And you have to look at the daily to know what the immediate short term's doing. And the adolescent micro time frames if you want to get rich quick. Quote unquote. There's no get rich quick scheme around here, right? I'm just chatting shit on that one. Right? There's no get rich quick scheme around here. Anyone that told you that is gassed up. Okay? I'm telling you straight up and down, this is not a get-rich-quick scheme. Okay, you want to do that, start a Shopify account or do some drop shipping or do some affiliate marketing, right? This is not that type of sport. We don't play that sport around here. Cool, leave it there. How are we doing for time? 17 minutes, that's good. So let's pull up a weekly. Let's have a look at her. So the weekly is still underneath its 200-day moving average. So for me, realistically, risk would still be to the downside on a weekly. Now, an extension to that would be this. We've got the relative strength index continuing to fall underneath $27,995. So in theory, momentum's coming down. We've been downtrending ever since July. Okay, that was the current yearly high and previous quarterly high. And subsequently, we've been dropping by thousands ever since, okay? I don't get in the way of this, all right? I adapt my sail, I evolve when the markets tell me to evolve. I don't just stand there and get soaked in a storm, like half you guys, right? Half you guys just want to stand there and wait for the storm to pass. No, we don't get rich like that. Oh, I'm going to wait for the bottom and buy the bottom. That doesn't work like that. You and what army is going to buy the bottom of the market? We're not in the business of catching falling knives. If a knife is falling, what's in motion stays in motion till it stops. And that's Newton's law of physics. And Elon Musk once said this. He's seen many men and many women break the laws of woman and man, but no woman or man has broken the law of physics. Right? So in essence, if we're falling, I don't speculate to the upside. That's not the sport I'm in. The sport I'm in is, okay, we're falling. I bet the market falls, and when it stops, I take my opinion off and I flip my trade the other way. Simple. Very, very simple. Humans make it very hard. Oh, the market's falling. It's a cost of living crisis. A load of fucking bollocks. We look at the M2 money supply. We look at the Chinese money supply. We look at the Euro money supply. It's in the trillions. There's no shortage of money, my guys and dolls. All right, I don't want to be too prolific there. Guys and dolls, right? There's no shortage of money. There is a shortage of education. There is a shortage of people's lack of ability to tap into the liquidity, right? I don't care if you're dyslexic, black, white, silver, pink, or purple. The crisis is a lack of IQ. Luckily, we've got AI now to help us, right? We've got AI, we've got blockchain, we've got information at speed. There's no excuse to be an idiot. No excuse. Oh, you wanna copy them because they don't do it, so you're gonna copy them. Well, guess what? Your family, your friends, your co-workers, largely speaking, they're not gonna make it. They're going to be working harder for longer for the same fiat barter that they are debasing at a biblical pace until they're 60, if they make it to 60. That's not an opinion, that's reality. Tomorrow's promised to no man. Money comes, money goes, time never comes back. I'm not wasting your time on this podcast. I'm telling you the realest talk. Life is too short to work Monday, Friday for Saturday, Sunday off. Life is far too short to work Monday, Friday for Saturday, Sunday off, or to work 4 weeks on and get paid 4 weeks after. I call it modern day slavery. Back in the day they had metal collars, now we've got blue collars and white collars. Yeah, I'm taking it there. I'm Hovis bred, I'm best of both, I'm black and I'm white. I can talk how I talk because I walk how I walk and I stand on it. And you can dox me. I'm publicly telling you the play every day. Am I lying? Am I gassing? Or am I telling you the truth? Okay, cool. Nice. Okay, nice. Right? The reason I'm getting like this and the reason I do my deliveries like this is to really not condescend. I want to shake you, proverbially speaking. I want to shake you by your collar to really show you, look, if you really want wealth, you have to find ways how to make money in your sleep, or you will be working until you die. And I really mean that. Warren Buffett said it the best. I'm simply paraphrasing and standing on the shoulders of giants. Okay? You either put your money to work or you put your time to work, and you get exploited by people that are smarter than you. It's a society, dude. It's the way it is. I'm sorry. You can have cognitive dissonance. You can put your head in the sand bucket and pretend it's not that way, but I'm telling you it is. It's been that way since millennia. Since the Aztecs, the Babylonians, the Crucians, the Mayans, it goes back into history. The smartest people slaved the poorest people because they just lack education. Now, education is decentralized. People had to pay thousands to go to uni. Now they can ask the same questions to AI and get better answers. Interesting, right? There's no excuse no more. The playing field has been leveled out. It's been leveled out overnight. And half of you are still stuck in the past. You're still laggards. You're still sheep following sheep and pigs. Well, guess what? Sheep and pigs get slaughtered. I'm the good shepherd. I don't want you to be a sheep. I don't want you to be a pig. I want you to be aware. There is a difference. Okay, cool. So let's go back into the weekly. What do we see on the weekly? So again, as long as we're underneath 28.1, risk is to the downside. It's the same signature on a monthly basis and the same signature on a weekly basis. We've got momentum waning to the downside. Simple as that. We've got trend to the downside. Simple as that. We've got volatility at stark lows. Volatility is contracting aggressively. And the political uncertainty around planet Earth is not really a recipe for bullishness, is it? Just be logical, guys and dolls. It's so simple. The answers are everywhere. The answers are written on the walls. Turn on BBC News. Let me know if it's bullish. They're not bullish, dude. They're perpetuating fear and war. Why? It's the agenda, dude. The quicker you figure out the agenda, the better you'll be. I don't want you to be a victim of it. I want you to be prepared for what's about to come. Because there is something that's about to come. I'd advise you go buy some tin food. That's what I'd advise. And you know the tin food's fine. If it expires, it'll be fine. As long as the tin's not bulging or seeping out liquid, you'll be fine. But that's what you should be doing. Not hoarding Bitcoin and gold and property. Fuck that. That's been done out here. I'm telling you, you'd go hoard some food. Because what's about to come has been written in the book of life, in the book of Revelations, in the book of Daniel. It says, beasts shall rise, nations shall rise, the bear nation shall rise. The bear nation is Russia. A lot of you need to swat up on your scripture. Never mind internet money, never mind financials. Go and get yourself right with the word of God. Because I know what forces I'm dealing with. I know what's about to happen. I'm not telling you to go speculate and go waste your money and piss it up the wall. I'm not telling you to go buy some Bitcoin and piss your money up the wall. No. telling you to get educated and be smart about this regime, because they've been picking up critical mass since March 2020. They ain't going to give it back now. They are not going to give it back now. All right, cool. Leave it there. Don't want to get too down that one because I could spend hours on that one. Anyways, cool. So yeah, in essence, the weekly momentum's down. The weekly trend is down. Do I go against that? No. A wise man taught me this, right? You don't want to be the bloke that went against the tide and died. Okay. I see the shift in ocean and I just go with the flow, right? I'll just go with the flow to get the dough. I get on my surfboard, I ride the wave, up or down, shake it all around. I don't give a flying, you fill in the blank, right? I don't give a fuck, right? A lot of you do, and that's your problem. A lot of you are married to the upside. If it doesn't go up, okay, that's it. If it doesn't go down, okay, that's it, right? You gotta be nimble. You've got to be like liquid, like Bruce Lee said, right? When the water gets poured in the cup, the water becomes the cup, right? When we're playing liquidity, both to the upside and the downside, you've got to be ready to shift and evolve and adapt to the market flows. Because it's not linear, right? The markets are not linear, it's linear regression, meaning it will ebb and flow to the whim of trend and volume, hence my company title. God has blessed me with this knowledge, dude. I don't need to slave a day in my life no more. I've done that in my 20s. I started trading the markets in my 20s as well, right? For 8 years I've been doing this. That's 80% of my 20s. I started at 22 years old. I'm now 30 years old. I don't need to cuck out in the Marxist construct not one single day. Why? Because res numera, strength in numbers. Once illuminated, you can't go back. You can't go back. Anyways, cool, leave it there. Let's pull up a daily and let's see what the daily's looking like. So the daily is battered, much like the weekly. It's underneath the 200-day look back period. So for me, this is very canny, right? The monthly's underneath the 21, the weekly's underneath the 200, and the daily's underneath the 200. So respectfully, the 200-day look back period is a massive moving average, okay? It's the best part of a year. So if an underlying asset or indice is underneath its average for 200 days, maybe it's in a downtrend. Maybe it's falling. Maybe there's a discount. Maybe, right? So the idea is simple. What would further solidify this stance on edge? Well, stochastic reflexivity. The stochastic reflexivity will continue nosediving as long as Bitcoin's failing to close daily price action back above $27,839 in the next 14 hours and 11 minutes on the dot. On the dot. There ain't no fugazi around this side. I'm telling you on the dot, wagwan, right? And this is exactly wagwan. As long as Bitcoin is closing daily price action in the next 14 hours and 11 minutes underneath $27,839, risk is to the downside. Probability is waning to the downside. Simple. I don't make the rules. I set my sail in accordance to the wind and I go with the momentum. I don't think I'm bigger than the laws of nature. The richest man in China, he fell from his balcony and died. Why? Moral of the story? Gravity. No rich fuck is bigger than the laws of physics. Simple. It's the same with momentum, it's the same with gravity. What goes up must come down. It's the grand equalizing force of balance. And I stay on it. Cool, leave it there. So, okay, nice. And by the way, don't think I'm being angry or mad, because I'm really not. I'm so happy. I'm the happiest I've ever been, dude. And I'm seriously, I feel very blessed and very honored to share this knowledge with you, right? So please don't take it the wrong way. Don't think I'm trying to impose upon you anything. I'm simply saying, look at the data, right? Here's the fundamentals. Here is where we are in the timeline of empire, the rise of empire, the fall of empire, the rise of the dollar, the fall of the dollar. And we're also seeing political nations at war, Ukraine, Russia, Israel. Use your head. That's what I'm saying. Just use your fucking head. Right? Don't listen to me, just use your fucking head. Are we in a bull market or are we in a bear market? Use your head. Look at the trend. Have we been falling since July? Yes, we have. Has the dollar been going up since July? Yes, it has. It's an inverse correlation. Inverse correlation. And I'm going to pull that up really quickly. Let's look at the dollar. I feel like we should do this. We need to look at the dollar, man. Right, the dollar, if you want to know about what Bitcoin's doing, look at the dollar, right? F Bitcoin, F crypto, F all of that shit. let's look at the dollar, right? Because the dollar is the world reserve currency. When people say, oh, you live in England, why do you talk in dollars? Because it's the world reserve currency ever since the 1970s. Ever since the 1970s for the last 50 odd years. So I denominate my assets in dollar. I don't denominate my assets in a inferior fiat barter. That is thick. Oh, but you pay your bills with pounds. Of course I pay my bills with pounds. It's inferior currency. I pay my bills in inferior currency. I don't store inferior currency. I don't trade inferior currency. I trade Bitcoin and dollar. F everything else. Fuck it all. Anyways, cool. Let's go back into this. So looking at the dollar, what do we see? So the dollar's been going up since July, and it's recently had a pullback over the last 3 days. So this is why we've seen Bitcoin go up over the last 3 days, because the dollar's gone down over the last 3 days. Now, this is a simple message I'm going to leave you guys with, okay? If there's one thing that you take from this podcast, I want it to be this. I want it to be this. If the dollar is stronger, you need less of it to purchase the same goods and services. However, if the dollar is weaker, you need more of it to purchase the same goods and services. Okay, it's very simple monetary policy stuff, but you'd be surprised how many people haven't fathomed that. If you understand that, you're part of the 10%. Okay, I'm being serious with you. People get confused. GDP, CPI, inflation. They don't know what it means, right? They know fuck all. That's why they call it a cost of living crisis. They know fuck all. I'm not being funny. I'm not being funny. They've been force-fed a lie by the establishment. They've been force-fed a lie by people smarter than them. So I don't blame them, right? I don't blame them. They don't teach you this in school, right? They don't teach you to get debt to buy cash flowing assets. They don't teach you that. They don't teach you to short the market when there's a debacle. They don't teach you that. They don't teach you that. Anyways, let's go through this really quickly because I'm conscious of time now. So looking at this, what do we see? So the dollar is now pulling back, okay? So the RSI, the MACD, and the stochastic momentum for the dollar is waning aggressively to the downside. But again, will this be a trend reversal just because momentum's calling off? No, I don't think so. I think momentum is resetting. Then I think the dollar will continue its onslaught back to the upside. Now, a further idea on this would be this. If we pull up the S&P 500, the S&P has already bounced the 200-day look-back period, right? So the S&P is basically cherry-picked basket of stocks that measure the health of the American economy based on the market capitalization of the biggest players, the top 500 players. So that's your Apples, your Googles, your Netflix, your Teslas, you know, all that jazz. Your Berkshire Hathaways, you know, all your big boy funds and Coca-Colas and all this jazz, right? Hyperbolizing the whole basket of stocks, right? But at the end of the day, what you need to know is this. If the S&P is bouncing, typically legacy is good. Now, it's very interesting how legacy is 88% bullish on volume. We do see the trend bounce the 200-day look-back period. And also we've got bullish momentum curling back to the upside, verified by the stochastic momentum, the RSI, and the MACD. So realistically, it's looking really constructive, okay? The S&P is looking like it wants to bounce. It's looking like it wants to bounce. But remember, the S&P does not trade on the weekend, and the US and Canada have a bank holiday this forthcoming Monday. So I do expect a sideways chop, a bit of a distribution and a reaccumulation going into Tuesday. And then when Tuesday opens back up, I think that's when we'll see the major liquidity injection. Okay, keep it nice and simple. So let's bring this bird to a landing. Okay, let's bring it to a landing. My opinion is, as you kind of already guessed, it's pretty bearish. I don't speculate on a weekend. I typically observe and yeah, just chill out, you know. I like to recalibrate on the weekend. I like to learn. I like to de-risk. And yeah, I think that's basically that. Is there anything else I want to mention on topic? Yeah, let's look at the 4-hour really quickly, right? I'm going to mute the trend volume matrix. That's one of our trend volume premium indicators. I sometimes use it, I sometimes don't, but for this, we won't use it. We'll use nice and simple ones, which is the trend volume pro version 2 and the trend volume inflection indicator. So looking at this, what do we denote? Okay, so the 4 hour had a sell signal at 9 o'clock last night. So at 9 o'clock last night, my 4 hour time fractal on Bitcoin said to piss it off, right? At $28,292, the market said to get out. Not me, the data, the numbers. Numbers don't lie. Men lie, women lie, numbers do not. Men lie, women lie, numbers are real. Numbers are the universal language of truth. Not German, not Spanish. Numbers, numerology. Numerology is how we measure chemistry, physics, biology. All the sciences are synthesized by measurement of number, not opinion. It's quantitative over qualitative. So again, as long as we're underneath $28,292, risk is to the downside on a 4 hour basis. We also see 52% sell pressure on a 4 hour basis. So guys and dolls, it's simple. It's simple. We let the numbers do the talking, we let the scoreboard do the talking, and the podcasts are going to keep the timeline correct so everyone can witness greatness in real time without sounding too arrogant, right? But, you know, I obsess on this and I'm sharing my passion with you, so you don't have to spend 8 years in front of a chart to work out what's what. You can just listen to me and get the gist really quickly. And if you want further assistance, reach out to me. I'm always approachable. I don't want you to think I'm unapproachable because I'm so opinionated. You know, I had to learn the hardest way possible. The market really had to humble me. So this is what I'm sharing with you so willingly and so freely, because when I was younger, I wish there was someone like me telling them what's good. What's the pros, what's the cons, what's the Libra scale, and what side is favorable. I wish there was someone that had no agenda that would just tell me the data. And now that person is me for you. So I'm going to leave you on that one. God bless you. Enjoy your weekends. Take yourself outside the charts. Go work on your health. It's all about health and, health and love. I think the Greeks coined the term well health is wealth, right? Well health is wealth. You've heard health is wealth. It comes from the Greeks, dude. Well health. So go work on your health. I believe fitness and finances, there's a tight correlation. So yeah. Whatever that means, walk a dog, go for a run, do whatever you got to do. Do some press ups, do some squats. If you've got a strong mind, you'll be able to beat any market regime, okay? Any selling regime by the algorithm or any buying algorithm program. You'll be able to survive and adapt your sale if your mind is strong and your body is strong. Do not acquiesce and bend the knee and get simped out by the system. That's a serious topic. I'm going to leave it there. God bless you. I'll be back on Sunday to preach the good gospel. Until then, I'll see you soon.